Hi friends, Simit here from InformedTrades.com. Today is Friday, June 20th, 2014. Time for our daily Forex chart review. Basically, in these sessions each day, I share the trades I'm placing, adjustments to existing positions that I put on in the Forex market. All a part of helping traders learn. My style of trading, I'm going to go review my trades kind of quickly. My style of trading is price action swing trading in the Forex market. We have a lot of information on this style of trading as well as many other styles of trading over on InformedTrades.com. Check it out. Share your knowledge. Register as a member. We have structured video lessons taking you from the beginning all the way to more advanced topics in a variety of markets, variety of methods. Check it out. Share your knowledge. Register for practice account. We can all learn together. Okay, let's take a look at the charts. Right now, first up, as is customary, is a chart of gold. Big day up. Now, yesterday I was had some events going on, so I was unable to do a video. But yesterday's move in gold, wow, look at that. We went from below 12. We went from basically 1275 all the way up to 1312. So what's that? 25, 35, $38 about 38, 37, 38, something like that. So it looks like so far today we're having a little bit of a down day. It seems like, although it looks like we gapped up. So that's interesting. Lots of gaps lately. In any event, yeah, this is we broke out. This is really gives the bulls a lot of momentum because we cleared the 50-something moving average and the 200 exponential average. These sometimes the trading view charts in the morning time in Chicago here are a little wonky. You're not seeing the moving averages displayed, but basically we have cleared both the 50 and the 200 exponential moving average. So we're above those. We're above the major support level at 1280. Broke through that. This is really big news for the bulls. So that's I'm long-term bullish gold. I have a considerable portion, at least relative for me, my net worth in gold. So that's comforting. Although I wouldn't have minded if it stayed a little lower, as I am really interested in buying just a bit more. So that's gold. Bitcoin. This is, as I mentioned before, I'm viewing this as a small speculative bet. This could be a little cause for concern in that this could be a interim high. And price, we could be in the beginning of a downtrend here. However, I still think buying at 550 is reasonable. Even 522 is solid. So let's see. Ideally, we would be able to. We wouldn't retest these lows. We would set a new high from here. But of course, we don't always get that ideal. And of course, it's not ideal for those who wish to buy. So we may, if we come back down to 522, I still think that'd be a buying opportunity. With Bitcoin, I have a small amount that I bought here right at this breakout. I'm viewing it as an educated lottery ticket. I'm willing to lose everything I put in. Of course, hopefully it will go much higher, or at least speculating on the off chance that it could go much higher. Aussie. Okay, now in terms of orders that I have on in the market, let's see. Some of these are a little. I did not have an Aussie Canada order. I did not have an Aussie. Oh, Aussie dollar. This trade got filled. And this trade actually worked. Oh, we're looking at Aussie Canada. Let's look at Aussie dollar here. Yeah, so this trade worked out really well for me. The Federal Reserve, Janet Yellen made the announcement that they're, likely to be dovish. Once that news came out, price rallied, huge candle here, rallied a bit, hit my profit target, and then reversed. So this is a really nice feeling of, very little, almost no time spent with floating loss, and very little, just 2-day trade, which for me usually. My long trades take a week or two to fill, and if I get stopped out, it happens very quickly. This is the opposite scenario. Got filled really quickly. That's nice. Australian dollar is now reversing, though, giving back some of those gains that it made across the board. Aussie Kiwi is an order I have on. Now, this is an order I put on yesterday. I have a document on my blog on Informed Trades. Basically here, we saw a pullback, bottom of a price channel here. There's a 50-some moving average right around here. We have a support level between, or right near 61.8 Fibonacci retracement, and what is kind of like a hammer candlestick pattern, this one right here, the June 18th candle. I had an order to go long here, June 19th, did not get filled, just missed it by a couple pips. And in hindsight, maybe I should have put that order up there. Maybe would have gotten filled there if it was just 5 or 10 pips higher. In any event, it did not get filled. The market is now leaving without me, so that's a little disappointing. to have missed out on the trade by a few pips, but it's definitely happened before, and realistically speaking, it will probably happen again to me. The lesson, I guess, to learn is, try to be a little less demanding in where I get filled. It's always a tricky balance, though, because I still want a 3-to-1 reward risk, and it needs to be logical based on where the price levels are at. So sometimes that's a bit tricky. It's still something I'm working on and improving as a trader. I expect there'll be more issues like that, but hopefully I can do a better job of getting filled when I want to get filled without taking on additional risk. So that's Aussie Kiwi. One other order I put on today, and I really only saw one other order that I liked, is in Euro Dollar. It's actually, what is this? Let me add that to my watch list. Let's go there. Okay, yeah, this is another order that unfortunately, so we have a clear downtrend here. The 50 simple moving averages are right around here, above price. You can visually see a clear downtrend, especially since early May. We're also at a 61.8. Let me actually draw that. I thought I had drawn it, but it wasn't saved. So if we go from this swing high to this swing low, that puts us right at 61.8 Fibonacci retracement level. And I would say right here is more interesting. So I'm set to short here at 36.10. And there's a moving average right there, 36.10. My stop is at 36.50. Excuse me, my stop is at 30. Yeah, my stop is at 36.50. So my stop's right here. Basically, I'm speculating that this high here will not be breached. 36.10 is where I'm filled. 36.50 is my stop, and my target profit is way down here, 34.75. That gives me a nice 3-to-1 reward risk. That's what I was hoping for. However, the problem here is that this order just might not get filled. Because we've had a big down day. This is a shooting star candlestick pattern, really nice. Just another instance where the market has, similar to the Aussie Kiwi, although this one's even worse, where I really should have placed the order yesterday. But, this candle wasn't complete yesterday, so at this time, when I look at the markets, that's a little, lifestyle issue. I can really have 1 hour to look at the markets, and I'm trading off the daily chart, causing me to miss some opportunities. That's just part of the situation. Nothing I can really do there. That's something I accept, and that's fine. Maybe if I can alter my lifestyle, alter my trading routine, that might make a difference. But till then, I'll just have to accept these situations. So that's about it. I just placed this order. Right now I have 2 orders. Both of them, honestly, looks like they're unlikely to get filled. But if they do get filled, I'm happy to accept them. And that's about it for this week. We'll be back next week with another look at the markets and some more trades that we're placing. Any questions you have, join us at InformedTrades.com. Best of luck in your trading, and we'll see you next week. Take care.